In today's world, many of us know that we have a ton of options in regards to generational wealth. But the concern that most retirees have today that we discuss and have conversations with is how do you really protect the money that's sitting inside of those other assets, such as stocks, bonds, annuities, IRAs, 401ks, and even real estate. All of those are still tied to the US dollar. When we start talking about generational wealth, one of the stories I'm going to share with you is a story that I shared about 2 or 3 years ago. When I was much younger, in the year around 2000, my parents were heavily involved in farming and ranching here in South Texas. And during the Y2K crisis, most farmers and ranchers during that time were concerned, like most Americans were, that the computer system was not going to roll over. When that took place, many farmers and ranchers in our community went out and bought gold. My parents happened to be one of those individuals and groups of individuals that purchased gold along with my grandparents. My parents acquired roughly $250,000 in gold at that point in time, and in the year 2000, gold was at a low of around $242 an ounce. If you think about real asset protection or generational wealth, a small transaction of $250,000 19 years ago at today's spot price is roughly worth $1.6 million. You can look at a lot of real estate and you can look at a lot of stock accounts and you can look at a lot of 401ks and a lot of IRAs. But it's pretty hard pressed to find an asset that can compare in 19 years, moving from $242 an ounce to around $1,300 today, increasing from $242 to making over $1.65 million. Most of us know and believe that in today's world that the economy of the United States, the debt is still continuing to grow. And the money that's sitting in those accounts is really what's at risk. It's not that your stock position doesn't have the ability to grow, but how do you protect the value of the dollars that are sitting in there? Under the next crisis that many expect is fixing to take place, they understand that you are going to lose twice. When the crisis sets in, the price of most stocks will decline. The second phase of that will be that the price of the US dollar will start to decline. Most of us that understand the debt of the United States understand that a big portion of the world is currently pulling away from the US dollar. These are the key elements that we have to understand when we start talking about protecting generational wealth. We have to look for protecting the value of the dollar as it stands today. And you have time to do that while the value of the dollar still has some substance behind it currently today. If you'd like to get more information on how to protect your assets for generational wealth, you can pick up U.S. Money Reserve's latest gold information kit. So please click on the link below or call the number on your screen to get your copy. If you find this information useful, we encourage you to like and share this video. And if you're watching us from YouTube, subscribe to our channel. That way you don't miss a single episode. I'm U.S. Money Reserve's Coy Wells, and as always, thank you for watching Market Insights.